Palantir Technologies, which trades under the symbol PLTR on the Nasdaq, has long been a favorite among individual investors who are enthusiastic about artificial intelligence and data analytics. Over the last 2 years, its stock has seen an incredible surge in value. These figures have solidified Palantir's reputation as one of the most watched and debated artificial intelligence companies in the entire market. The latest boost in confidence comes from Mariana Perez Mora, a well-known analyst at Bank of America who covers aerospace and defense companies. She recently increased her price estimate for Palantir stock from $180 per share to $215 per share. This updated forecast represents the most optimistic price prediction currently held by any major Wall Street analyst. It also implies about 17% potential upside from Palantir's current trading level of roughly $183 per share. Mora's revision has attracted significant attention because it reflects growing faith in Palantir's ability to continue expanding its influence across both government and commercial markets. In her detailed research note, Mora emphasized 2 distinctive strengths that make Palantir stand out among other software and artificial intelligence providers. The first strength lies in Palantir's use of forward-deployed engineers. These are highly trained software developers who work directly with each client, embedding themselves within the client's team to design tailored artificial intelligence and data integration solutions. This approach creates a strong bond between Palantir and its clients, ensuring that each software deployment directly addresses unique operational challenges. At a time when organizations everywhere are racing to implement artificial intelligence-driven tools into their daily workflows, this hands-on engineering approach gives Palantir a significant competitive advantage. The second strength Mora highlighted is Palantir's use of an ontology-based software framework. An ontology is essentially a structured digital model that represents how different parts of a company interact with one another. It acts like a detailed cause and effect diagram that allows users to map relationships between data points, people, systems, and physical objects. This design lets companies use artificial intelligence to understand complex patterns, automate repetitive tasks, and make better strategic decisions. In other words, while most data platforms simply gather and visualize information, Palantir's ontology helps organizations turn data into meaningful action. This distinction is key to understanding why Palantir continues to stand out. This framework allows companies to not only analyze what has happened in the past, but also predict and respond to future outcomes. During the company's Q2 earnings call, Chief Technology Officer Shyam Sankar explained that Palantir's long-term investment in ontology development and its foundational infrastructure have given it a unique ability to meet the exploding demand for artificial intelligence solutions. His remarks underscored Palantir's strategy of building flexible, adaptive tools that can serve a wide range of industries, from defense and security to healthcare, finance, and manufacturing. Independent research firms have also confirmed Palantir's leadership position in artificial intelligence and data analytics. Forrester Research recently named Palantir as the top-performing company in its most recent evaluation of artificial intelligence and machine learning platforms. Palantir's artificial intelligence platform, also known as AIP, received higher ratings than competing products from major technology giants such as Amazon, Microsoft, and Alphabet. Similarly, IDC, another well-known market research firm, ranked Palantir as the #1 company in its latest report on decision intelligence software. These independent validations are crucial because they demonstrate that Palantir is not just a popular stock driven by hype, but a genuine leader in the field of enterprise artificial intelligence. Palantir's dominance in the public sector remains one of its core strengths. A large portion of the company's revenue still comes from government contracts, and this side of the business has been accelerating for 6 straight quarters. Much of this growth has been fueled by renewed interest from defense and intelligence agencies seeking to leverage artificial intelligence to strengthen national security, improve resource allocation, and enhance decision-making. Palantir's technology is already widely used within the United States government, and demand for its services has begun expanding internationally. Earlier this year, the North Atlantic Treaty Organization adopted Palantir's Maven smart system, an artificial intelligence-driven warfighting tool designed to improve military targeting, logistics, and supply chain efficiency. This marked a major milestone for the company as it extended its reach beyond the United States to an international defense coalition. Soon after, Palantir signed a massive 5-year contract worth £750 million with the United Kingdom's Ministry of Defence. The purpose of this agreement is to help the United Kingdom military develop and deploy new artificial intelligence capabilities that can strengthen its defense operations. This deal is particularly noteworthy because it represents the largest government contract Palantir has ever secured outside the United States. Mora from Bank of America believes that this positive trend will continue for years to come. She expects that more countries will adopt Palantir's Maven smart system and related technologies as they modernize their military and intelligence operations. Based on her analysis, she predicts that Palantir's government-related revenue could reach $8 billion per year by the year 2030. However, Mora also sees even greater potential in Palantir's commercial business. She estimates that revenue from the private sector could climb to $10 billion annually by the end of the decade. This growth will likely come from companies choosing to buy Palantir's artificial intelligence operating system rather than attempt to build their own in-house solutions, which would require more time, expertise, and resources. Altogether, Mora expects Palantir's total annual revenue to reach $18 billion by 2030. To put that figure in perspective, Palantir's total revenue over the past 12 months was around $3.4 billion. This means Mora is anticipating an average annual growth rate of about 35% over the next 5 years and beyond. If Palantir achieves these numbers, it would place the company among the fastest growing software providers in the entire artificial intelligence sector. Industry data also supports a favorable long-term environment for Palantir. According to Grandview Research, the global data analytics market is expected to expand at a compound annual growth rate of 29% through 2030. This rapid expansion is largely driven by growing demand for artificial intelligence and machine learning applications across all industries. Because Palantir is already a recognized leader in decision intelligence and has unmatched experience in applying artificial intelligence to real-world problems, the company is well positioned to grow even faster than the overall market. However, despite all these positive developments, investors need to be cautious when evaluating Palantir's current valuation. The company's shares are currently trading at 134 times its sales, which makes it the most expensive stock within the entire S&P 500 index. In simple terms, Palantir stock could lose roughly 70% of its market value and still remain the priciest company in the S&P 500 index. Even if Bank of America's forecast turns out to be accurate and Palantir's annual revenue does reach $18 billion by 2030, the stock would still trade at around 24 times sales at that point, assuming the share price stays the same. Currently, only 8 companies in the entire S&P 500 have valuations higher than that. This means that even under an optimistic growth scenario, Palantir would still be considered one of the most expensive companies in the index based on its sales multiple. This brings us to the key takeaway for investors. Palantir is without question a remarkable company. It has cutting-edge technology, strong relationships with both government and private sector clients, and a proven ability to innovate in one of the most competitive fields in the world. Its artificial intelligence software helps organizations make faster and smarter decisions, and its forward-deployed engineering model ensures that clients receive tailor-made solutions that align perfectly with their operational goals. These are rare strengths that give Palantir a distinct advantage over its competitors. Investors who buy in now may face significant volatility if the company fails to meet or exceed these lofty expectations. Therefore, while Palantir remains one of the most exciting companies in the artificial intelligence space, investors should carefully consider whether the current price offers enough potential upside to justify the risks. For those seeking exposure to artificial intelligence but with more balanced valuations, there are plenty of other companies in the sector that might offer better opportunities. Palantir's long-term future is bright, but patience and timing are key for anyone looking to invest in this fast-moving market. Palantir Technologies, a leading artificial intelligence company traded on the NASDAQ under the symbol PLTR, recently received a bullish outlook from Bank of America analyst Mariana Perez Mora, who raised her price target from $180 to $215 per share, signaling about 17% potential upside. Mora highlighted Palantir's unique strengths, including its use of forward-deployed engineers who create custom solutions for clients and its ontology-based framework that helps organizations automate and improve decision-making with artificial intelligence. Mora predicts Palantir's government revenue could reach $8 billion annually by 2030, while commercial revenue might climb to $10 billion, driving total revenue to about $18 billion per year. However, despite this growth potential, Palantir's valuation remains extremely high at 134 times sales, making it the most expensive stock in the S&P 500 index. Therefore, while Palantir is an innovative and fast-growing company, its current price suggests limited upside and significant risk for investors. For more more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.